Hello, it's Thursday, it's 7 o'clock, and I'm Stephen Englander, so welcome to my live show. It's the exciting week this week. It's the budget, isn't it? Budget 2021. It's a bit of a nothing budget, really. I mean, it's got some little points in it, and it's got some little things that you should be aware of. So I'm sure you know already what's in the budget. So I thought I'd just spend 20 minutes or so just talking through it and seeing how it affects you. And if you do have any questions about it, now's your chance to phone in. No, not phone in. That's next week. No, now's your chance to text in. The camera crew just went a bit funny then when they thought we were going to have people phoning him. Right, so let's just have a look at what's actually in the budget. This very exciting budget. So we've got starting off. I've had a few calls today about corporation tax because everybody thinks tax is going up to 25%. Now, it's not tax overall that's going up to 25%. It's corporation tax. That's tax on company profits. Now, it's not as bad as you think because it's not actually going up to 25%. Not yet, anyway. We've got until 2023, so that's 2 years away. And by the time you have to pay it, it's longer still. But bear in mind as well that the people earning £50,000 profits or less will remain on the 19% tax bracket as they are now. So unless you're earning more than £50,000, it's not going to go up. And then you've also got to remember that it's going to go up incrementally. So it'll go up like 1%, depending on your turnover, and then 2% and then 3%. So by the time you're on the 25%, you've got profits of £250,000. So nothing to worry about there. And if you're earning that type of money in 2 years' time, well, that's a different thing. And I'm sure by then there'll be plenty of tax incentives and tax deductions that you can make in order to pay less tax if that's what you're looking to do. So yeah, I wouldn't worry. No worries there. No real changes there. What I do like that's come up is something they're calling the super deduction. Now, super deductions are not new, but this is quite generous. Basically, what happens is if you've got an expense, let's say that you have £100,000 profits just for the sums, and you have an expense for £10,000. So you apply the £10,000 against £100,000, which means that you've got £90,000 to pay tax on. But when you've got a super deduction like this, what they're doing is they're saying, well, we'll give you 130%, we'll give you 1.3%, 130%. And what happens there is, let's say that you've got that same £10,000 expense, when instead of knocking £10,000 off the profits, you'll knock £13,000. So you're getting tax relief where it doesn't exist. So it's quite useful, that. Now, the type of expense they're looking at are expenses that help you build back the business. So they're looking at things like capital assets, machinery, equipment, anything that helps you to develop that business. You're not going to get things like advertising, but you still got R&D claims which work in a similar way. So if you've got any doubt, just let me or your accountant know, and we'll deal with it. Incidentally, I am offering people a quick sort of tax diagnostic where we'll just go through a form with you and see if there's anything that's relevant to you in this. So if you're a client, we will get to you eventually, and if you're not a client and you'd like this done, just book it in with us. So it's just to make sure that if there are any claims that you can make, that we can look at them. One of the things I'm very conscious of with any change in legislation, whether it's really good, really bad, or just a little bit good or a little bit bad, is that you get all these types of firms. Sometimes they're accountants, sometimes they're sort of pseudo accountants, sometimes they're reps for accountants, sometimes they're tax specialists, or sometimes they're pseudo tax specialists. And what they do is they contact you with usually an email or some sort of spam, and they're telling you that there's this fantastic new super deduction, and they will create massive value to you and charge you enormous percentages. So somebody contacts you about something like that. Bear in mind, it is a pretty normal accounting procedure and there's nothing majorly clever about it. So there might be some extra work, but it's something billed by the hourly rate, not because you get £50,000 refund. So it's a normal accounting procedure. So if anybody's contacting you and telling you that you can get tens of thousands of pounds back, take it with a pinch of salt, or see what they charge first, and they want 40% of the profits back, just sort of, but you can always run it by us and we'll tell you what's available to you. So I thought that would be, useful for you. So it's a good little it's a good little initiative from HMRC. Now that's going to pretty much remain the same. You've still got the 5% hospitality rebate for people in that sector, and I think that's going on until April, and then to September, and then after that I think they're putting up to 12.5%. So personally, I'd keep your prices the same, but just pocket the difference and pay HMRC the 5%. But that's something for you to consider. Do you remember the old days whenever there was a hike in something like cigarettes or booze or anything in the budget, so the price is going up, and it wouldn't be going up until next month, but we all rushed to the pricing tags and put the price up now. So I'm not sure you can do that. But by the way, on cigarettes and booze, I'm sure you already know there's no change. So now I'm just going to mention inheritance tax, because it's been frozen now until 2026. Now that's not really a great thing, because it's not inheritance tax that's frozen. It's the personal allowance that's been frozen, and what that means, if you think about it, is that things are becoming more expensive. So your exemption allowance is being eroded away. But I suppose it's better than a direct increase in taxes for now, and there's got to be some repayment of tax. So this is maybe a more gentle way of doing that. Normal income tax, normal PAYE, there's no real changes on that, and that's another area where they've actually frozen the personal allowances, and again it means that right now, today, there's going to be no effect on you. But unfortunately, what happens is that over time things go up. I mean, the minimum wage rate, it's gone up again in this budget, and whether you agree with it or not, it's gone up again, and it will continue to go up probably over the next few years. And it means that if the personal allowance stays the same, you'll be earning more, so you'll be pushed over, and some of your increases in income will go into tax, and that works out the same at the higher levels, because it pushes more people up towards the 40% brackets and beyond. So just bear in mind that no increases in tax is often seen as a good thing, but freezing the personal allowance levels is it's a similar thing to raising the tax, the tax rate, but it's I'm just telling you what's going on here, and we can plan accordingly. There's as you'll know now, which I think it's a good thing. The furlough scheme has been extended till September, so still 80% of the hours not worked. The downside of this is that as time goes by, the employers are going to be expected to contribute more. So it'll be in increments of 10%, and up until September when they review the whole thing. So I'm not sure how much good that's going to do, if people are going to be let go or whether they're going to continue to be paid. But we'll see what happens. But by the way, there's I'm sorry, I can't help but laughing, because it's an apprenticeship, and the incentive will be extended that you'll get £3,000. Now, I've had terrible experiences with the apprenticeship schemes. I've had kids and morons coming in. I'm not saying that all kids are morons, but I've had a lot coming in. I won't do it anymore, because I've had too much aggravation. I've gone to the employed people up to the point where I'm due to get the incentive, and then the member of staff has left, or I just can't tolerate them anymore. They've been thrown out. And just be aware, it's not as good an option as you think. It's not fair to the young people that it is, but take people on because of their merit, not because you're getting some sort of incentive to take them on. Because if you get the wrong people, they cause more damage than anything you'll get from any incentive. So by all means, utilise the scheme, but make sure the person you're taking on is somebody you want to take on. just in the papers today, just as a side thing, Goldman Sachs, the boss, he basically says that working from home is a load of rubbish. It won't last. It's unsustainable. And a few months ago, I might have agreed with him. I certainly wouldn't have agreed with him, because all I got was people want to work from home. Look how good it is. We don't need as much expensive offices. You can live near the seaside and still carry on your job. But, looking around me and reading what I'm reading, people are hating working from home. That's my experience. So I don't think I don't think anybody really expected this, that people don't want to work from home. It might be better for them, but they don't want to work from home. So I don't know. Maybe when we look at the boss of one of the biggest financial firms in the world, maybe we should, listen to his opinion. Don't know what you think. The self-employed grants. Here's another one. You've got income support scheme, the self-employed income support scheme, the SEISS, has been extended to cover grants for February to April. So they'll be worth 80% of your average profits. So make sure you get those grants applied for. Just go online and apply for them. They're worth up to about £7,500 a shot. So make sure you do look for them. They're worth applying for. Let me see right now. I'm going to go over to my other notes here. Business rates holiday. This is mainly for people who are in the hospital and leisure, and it'll continue to the end of June with 2/3 discounts offered for the remainder of the year. As always with sort of business rates, I think they talk a lot of crap. I hate dealing with the rates departments of any council. You get gobbledygook all the time. I mean, remember, there are lots of other opportunities for reducing rates bills, like the size of your premises and if you're closed or whatever you're doing. But I often find that when it comes to the rates departments, that you get a lot of gobbledygook. So do make sure that you claim everything you can claim and keep copies and copies of everything that you do with them, because in my experience, they're the worst department in the world to deal with, and they tell lies. That's my experience. There is a new loan scheme. They're calling it the recovery loan scheme, and it's a bit like the one before Christmas. I think I mentioned before Christmas, where you can claim loans to help you in the business. And I think this is great. I mean, I don't understand why the government just don't keep this as a permanent thing. But basically, if you borrow money from the government, you borrow money from the banks or an approved lender, the government will guarantee up to 80% of that loan. And it's been, I mean, that's the Sybil's loan and all that, the bounce back loans, they've been great because people have actually not just, I mean, there's some people that have had to live on them or had to pay debt with them, but there are other people that have used this money as a safety reserve, or as a cash deposit to go and buy stock and do deals that never normally would. So I mean, I don't understand why the government don't guarantee every loan. Soon get the economy booming then. So it really is good. So make sure if you don't get them, at least make sure that you know about them, where to go. Just go online, go to your bank and see what criteria they're looking for from you. But keep things in reserve for as long as possible. Now, I just want to come away from talking about loans and grants and tax. And there's something that I'm not quite with, and I wonder if anyone can help me to understand this. It's to do with free ports. Now, I don't know if you know what a free port is, but it's basically a place that is excluded from taxes and VAT and duty and stuff like that. So basically, goods come in from the ships into the port, and while they're in that port, nobody pays any tax, any duty or any VAT. When they leave the port, that's when the VAT's made. Now, since we left the EU, they're planning now on extending 8 ports across the country to free ports. Now, we've always had free ports, but they've always been a bit of a, no one's ever bothered with them. So now all of a sudden, not only are we getting these new 8 ports, but they're being extended to 25 miles radius of the actual port itself. My understanding is that you can bring goods in, manufacture them into whatever you want, and then they go out again. So it saves an administrative burden. But I just don't understand it. I mean, it seems to me that they'll be creating lots of new jobs where they want to put those new jobs. I don't think they'll be creating any net new jobs, so I'm not quite sure what the idea is. To me, it sounds like they're trying to attract trade from abroad that it doesn't want to come because we're out of Europe now. So I don't quite understand it. I mean, if I was a restaurant, not that it would count, but just in principle, if I was a restaurant and I opened up in a free port, so I wouldn't pay VAT on the meal, but if I went to the loo afterwards for a poo, would I then have to pay the duty? Okay, it's just a thought. So if anyone can explain to me what the advantage of a free port is to the national economy, that would be great. And that brings me to no, it doesn't. I've already mentioned that, haven't I? Stamp duty. So stamp duty is it's been deferred again. So another 3 months from October, and then the holiday, I think it says here, is £250,000 for properties with a threshold of £250,000, and then reduced to £125,000. So I don't know how much of a benefit that is to people, but better than nothing. And finally, we have the mortgage guarantee. So I love this. It's nothing to do with tax, and it's nothing to do with business in general. But here's the thing: the government are looking to guarantee mortgages of up to 95%. I mean, how wonderful a gesture is that? So people that can't get on the mortgage, can't get on the property ladder, can now all of a sudden find a 5% deposit, and they've got a government-backed mortgage. I think it's wonderful. What I will say to everybody is that if you've already got if you're already looking for a property, or you think you might be soon, do it now. Because you know what's going to happen. The more people that can buy property and get on the property ladder, property prices are going to shoot through the roof. So great for people selling properties, but if you're going to do something like this, don't wait 12 months, 2 years when there'll be a lot of people buying property. Do it now, and then you've secured your nest egg. It won't work for second properties, by the way. It won't work for investments. It's only for a home. So, bear that in mind. If you've got kids that want to buy a house, and you can give them the 5% deposit, or they can get that together between you all, then it's I think it's a great thing that they're doing. Incidentally, just going back to the inheritance tax, one of the things that people don't realise that I missed off before is that when you've got inheritance tax, it erodes as inflation kicks in. So if you've got a property that's worth $300,000 now, but it then goes up for $400,000 because of inflation or generally property going up, then you're going to pay more. So if you're planning to die, now would be a good time to do it, and that way we don't have to wait for the monies to come in. Anyway, on that rather shallow review, I've had a question. So I'm back to questions, because that's all I can say on the budget, because there's not really a lot more. If you want to discuss things individually, I'm here for you. But we've got a question from an R. Sunak. R. Sunak, I think I've said that wrong, from London. And he says, I know this isn't an accounting question, but I was looking at the new Ferrari Roma, and I'm wondering if I'll still be able to afford one after this budget. And I'm thinking, which is the Ferrari Roma? I think that's quite a nice one. Well, they're all nice if it's a Ferrari. But, R. Sunak from London, if you want a Ferrari, you go for a Ferrari. I'm sure this budget won't make any difference to you or anybody else that's considering these types of things. I don't think this budget is really going to make any difference to anybody. I think what this budget is doing, as I said last week, is I think it's setting the roadmap out for bigger and better things. And maybe there'll be another mini budget in October, changing things a bit. Maybe next March they'll change things even more. But I think this is a roadmap budget, so I wouldn't worry too much about what's going on. There's very little here that affects you. So anyway, it's been a quick, short bulletin budget for tonight, and I've got nothing more to tell you on this stuff. So we're going to have an early night tonight. I've not reached my full half an hour. We have 8 minutes to go. So thank you very much for joining me, and I'll see you next week, where we're going to put the world right and talk about all sorts of things that will help make you money. But thank you for joining me. Good night.